Why learning market structure is important and essential for a trader. The market is the most structured thing in the world. The technical analysis, the fundamentals, the geopolitics, all the things that human works with or human create them, they are structured. Why? Because we as human, we think in sentences and pictures and colors, and words that have their structures and their categorizations. So we talk systematically, we think systematically and in some structures, and we create these big wild beast name market with structures. So if you as a trader want to keep yourself on the right side of the market, you should know the concept structure. The market structure doesn't work how you've learned it in courses. I'm Mehran, your trading companion, and I'm going to surprise you how deep can market structure be rather than some textbook break-off structures and highs and lows in this channel. So subscribe for a free dive into ocean of new smart money concepts. This is the fourth episode of new smart money course playlist, so pay attention to playlists in this channel. And for getting deep into the market structure, we should first learn the basic conventional knowledge about simplistic view of the market structure. But what is market structure? The market structure shows us the order flow of the markets and the protected and targeted pivots. But first, why is it so important? The reason is that those powerful forces that can move a great market cap like Euro USD, they don't want to go to losses. They hate negative numbers. And if the market structure shifts and reverses, those great forces decided to profit from the other side of the market. It's the reason why if the market is moving from bottom left to top right, it is going to continue its movement until a powerful force starts to inject a hefty amount of opposite orders that can shift the market structure. Now let's talk about the definition of the market structure in the old smart money terms. We have a very simple concept named primary structure. What is the primary structure? The primary structure is the last obvious high or low or the last swing that we are going to observe until it gets broken. So the market first starts from the left of the chart and it has its last high and it's going to be the last low. So it is going to be our primary structure. And when the market breaks that high or low, we have a break of structure or BOS. If the market breaks the high, we are in an uptrend, and if it's breaking lows and making lower lows, we are in a downtrend. So higher highs and higher lows make an uptrend, and lower lows and lower highs make a downtrend, and we should try to find buying setups in an uptrend and find selling setups in a downtrend. For example, here we have our break-off structure. In this point, it came and broke this structure, so we have our break-off structure or BOS. What does it mean? It means that the order flow of the market or the current direction of the market is to the upside. What is the higher probable trading setup that we can find? It's only buying setups. Why? Because we are in an uptrend, and what happens in an uptrend? We are making higher highs and higher lows. So here is our high and here is our higher high. So what is the higher probable setup that we should take? It is the buying setups. Why? Because we have our higher high and it is high probable to try to find these buying setups. Why? Because we are in an uptrend and it potentially can go and break this high again. So if we try to catch these kinds of trends, first our win rate is going to be higher because these kinds of setups in an uptrend is going to break. They are not going, for example, to provide us with a selling setup. So When we have our break-off structure in the upside, we try to catch buying setup. First is going to be our higher win rate. The second result of these concepts and these points of view toward the market is that you are going to catch this trade, and for example, if in this uptrend the sales give you, for example, 1-to-1 reward to risk ratio or 2-to-1 reward to risk ratio, with catching these buying setups, even if you have some stop losses, even if you can't catch these setups in the early stages of this move, but you are going to have a very higher reward to risk ratio, because it is more probable that this move goes and breaks the high. And if the market go and breaks the low of the swing, we are going to try to catch selling setups, because that is higher probable and it is going to provide us with a higher reward to risk ratio. Now let's talk about the market structure in trending markets. I'm going to show you a showcase of an uptrend. We always consider that the market will continue its current movement. So if the BOS or break-off structure is happening to the upside, we try to find buying setups, and if it is trending down, I mean it is breaking lows and making lower lows, we try to find selling setups. But where we are going to find those setups, we are going to try to catch higher lows in an uptrend. For example, here we have our higher low. We are going to try to catch these higher lows in an uptrend, and in a downtrend, for example, if we have a downtrend and we are making lower highs and lower lows, we are going to try to catch lower highs. But how we can do them? It needs more knowledge and more practice, so have the channel. I'm going to teach you those concepts to find when and where you can catch these kinds of higher lows or lower highs. So when the BOS is going to happen to up, we always expect market to continue its current direction, not reverse. If you try to catch reversals, you are going to be crushed with the market. The BOS opposite of current trend is named CHOT, chart or change of trend. We always only try to find trades in the direction of current trend. That's higher probable and it's going to provide us with higher reward to risk ratio. We have some kinds of break-off structure that I'm going to talk about them in the next video. Let's talk about Bitcoin and its daily chart. First, we should identify our primary structure on the chart. Our primary structure is from this low to this high. Why? Because it is a swing. You can see that here. It is our swing, it is our low, and it is our high. So first we should wait until the high or the low gets broken. Let's see what happens. You can see that the high is getting broken. So now we are going to identify our leg or our swing, and when that happens, when the market starts to pull back, now we have our protected swing. I mean this low should be protected, because a lot of traders, a lot of market makers, a lot of people with power, knowledge and money entered the market for a buy, and if the market comes down and it goes under this low, they are going to become negative and they are going to lose a lot of money, and they won't allow that. At least they won't do anything for the sellers. They wait and they put their hands on their hands and they don't sell when these movements happen, because they are the buyer who are buying the market. So at least the people who can move the market, they are waiting for another upswing. But how we can find our POIs with higher accuracy? We can use the Fibonacci tool from the low of our leg and the point that the leg start to pull back. Where are we going to find our POIs, or we are going to refine our POIs from the 50% of our FIBO to 78. And if you go and just draw a box from 50% to 78, you can see that it takes off from this zone. And after that, we again go and identify our primary structure that is going to be from this high to this low. I'm sorry, it's going to be from this high to this low. So it broke this structure. It is our break off structure. I'm going to talk about how you can identify if the structure is broken or not in the next video, but now we have our break off structure here. Our primary structure was from this high to this low, and now our primary structure is breaking to the upside. Now we wait until it comes and pullbacks from this leg to this leg, from 50% to 78. And another important thing is that we should keep the last leg as well. It is important too. I'm going to talk about why, because we have a big imbalance here. If the low gets broken, it may take off from this imbalance from here to here. Anyway, let's see what happens here. So we are going to wait to market pulls off to 50% to 78. It's already a good trade. Now we have again our primary structure. It was a good trade, and we are going to mark our primary structure from here to here. This is the upward movement, and we are going to use our Fibonacci tool for accuracy from 50% to 78. And boom. So you can see that these concepts work with high probability and high reward to risk ratio, and we are just talking about structure and Fibonacci. We are just talking about two very simple concepts of new smart money concepts. So you can learn a lot of things in this channel. I'm going to provide you with free resources to study and to test it on your own charts. It doesn't matter which kind of charts you are trading, and in return I ask you to subscribe and hit that like and bell button. I'm in an internet blackout. We don't have access to good internet all the day. I can't trade all the day and consistently, so your support is much appreciated for me, so I can survive in these hard days. And in return, I'm going to make a monster trader from you. The next important thing is that using breakoff structures for double confirmation entries. What is a double confirmation entry? Let's see that on charts. What is a double confirmation entry? First of all, we should have our POIs, our imbalances, our liquidity points that we are going to talk about those concepts in this channel, and I've already taught you some of those concepts, for example, liquidity. But anyway, here we have our point of liquidity. It's the setup I taught you. It's the setup I taught you in the ultimate smart money concept trading video. I taught you that as a lower time frame entry setup, but that works as a structural point of view and approach as well. So we have our point of liquidity here, and we have our imbalance here. For understanding this concept, you can watch that video, ultimate smart money concepts trading video. We don't have that setup here or here because we don't have a good point of liquidity. It's too far away from this imbalance, but it is near this imbalance and this order block. So this imbalance and this order block is going to be our POI. That doesn't matter which of these POIs is going to work, because we are going to talk about double confirmation as our entry setup. So we wait until it comes and hit one of these POIs. After that, for example, for 4 hours, we can go to 15-minute or 5-minute time frames, and we wait until a double breakoff structure happens. I mean, first breakoff structure was here, and it came down, it grabbed that liquidity, it's that line and it hit our POI or our order block, it goes up and break the external structure. We don't care about these internal structures. So it break this structure for the first time, and we should wait until it breaks the structure for the second time. Why? Because it's a double confirmation entry and it is going to increase our win rate. Maybe we have a little lower reward to risk ratio compared to a single confirmation entry that is going to be a single break of structure, but our win rate is going to increase substantially. And we wait until the next break of structure happens, which happened, for example, here. Now we should wait for our entry. If we just, for example, identify our break of structure with shadows, you can see that we have our order block here, and we have our point of liquidity here. We can wait until it comes and hit our order block again, because we still have a small imbalance here. It's enough. You can enter this trade and it's going to work. It's the entry setup I taught you in that smart money trading video. Let me clean this up, and you can wait until it comes down and it hits our POI again, and it is a very good trade. So a double confirmation entry is when we have our POI, for example, here, and we want a confirmation to enter the market. When it comes up and it hits our POI, it comes down, breaks the structure, it comes up and it breaks the structure again. So we have our first break of structure here and our second break of structure here. Now we can enter the market at any POI, for example, here. With any setups you can learn in this channel or you know already. The third one is going to be combining structure concepts with any other trading methods to find high probability trades. It doesn't matter you are an indicator trader, a price action monger, or a total high time frame technical analyst. If you use a structure as trend recognizer, you are going to increase your results substantially. I'm even going to teach you a strategy using break-off structure, Fibonacci, and using divergences for entry in lower time frames in next videos for stock trading. That is a wonderful strategy with high probability and high reward to risk ratio. Watch that video in this channel, have the channel subscribe to see that video. So if you combine a structure with your trading method, it will help you to increase your results. And the last one is going to identifying high probability trend reversals using single or double break-off structures. Let's see that on charts. First, let's see some live results so you can trade with more confidence. Let's see them. You can see that it's just my analysis for my channel, my Persian channel. And you can see that I've saved these photos before it happened. It's the Euro USD and it's the pound to Japanese yen before it happens. It is the Euro USD trade. You can see that here. First I've put my entry here and then I've changed it to here. And you can see the results, and I've traded this pair from here. It was the better entry from here and it would provide me with a higher reward to risk ratio, but it was a mistake. I should have put my trading entry here or here in this open and close. It's a kind of inducement, but sometimes it doesn't get it. So the best entry was here. Why I took this trade and this trade? It is the trading setup I taught you in the ultimate smart money trading. You can see that we have our point of liquidity here and we have our imbalance right before this point of liquidity. So it grabs the liquidity, it hits that imbalance and it starts to go lower. Let's talk about break-off structures as trend reversals. What I mean when I say trend reversals, all the traders in the world think that, for example, if we have our trend reversal here in this zone, they think that it is going to come back and take all these up movement and take all these uptrend from here to this point. But it doesn't happen, and that's the mistake all the traders in the world are going to take. What does a break of structure and a change of trend mean? A change of trend or a reversal means that the market doesn't have enough liquidity, doesn't have enough force to continue its current movement, that is going to be this upward movement. So when the break of structures happen, for example here, what are we going to do? We are going to pay attention to, listen to this sentence, it's very important. We are going to pay attention to imbalances and liquidities. What is an imbalance? It's the space between the first candle and the third candle in a 3-candle formation. For example, here we have our first candle here and this 3-candle here. So the space between this shadow and this shadow is going to be our imbalance. And what is liquidity? You can see the ultimate liquidity videos. I have 2 ultimate liquidity videos in this channel, so watch them. Anyway, so the structure breaks. Our first target is going to be here. How we are going to trade it? We are going to mark our POIs, we are going to mark our order blocks, imbalances, liquidities, and try to grab those trades in the lower time frame to the downside. For example, it breaks down, we have our first order block here, and you can see that it comes, grab this point of liquidity, it hit the order block, and it goes to the downside. So it is going to be our trade, but our target is going to be this point or this liquidity. So our first important targets are liquidity points. For example, when it happens, I'm going to mark these points as my final target. And when it grabs it, I try to take sells, for example, here. And after that, so the first target is going to be our imbalances and our liquidities. The second and final target is going to be our Fibonacci levels from 50 to 78. After that, we should wait until it breaks the low, or we try to catch buying trades after, for example, this break of structure. So a reversal just means that it is going to pull back for a portion of the Fibonacci or for liquidity and imbalances. For example, you see here we have our break of structure here. Why? Because it came back, it broke our low, and it's a protected level. It comes and it breaks this structure, but is it going to reverse all the way up? No, it's just pullbacking. For what? For liquidities and imbalances. For example, we have a important point of liquidity here, we have an important point of inducement here, and we have a lot of liquidity here. So we can buy until it grabs, for example, this liquidity, or it grabs this inducement. You can see that it grabs this inducement and it shifted to the downward. When it shifts to the downward in the direction of the last leg, we are going to sell in every situation, in every POI, in every setups. You can see that that is going to work. And again, it comes back. For example, it breaks the structure to the upside, and you can see that. Is it going to take all these down movement? No, it is going to pull back just for a retracement. You can see that we can mark from 50 to 78, and when it shifts to the downside, we are going to sell everything. In every situation, you can sell the market. Why? Because it is our higher time frame, and it is not going to take all these down movement from this point to this point. It is just retracing a little bit of that down movement. For example, I think it is 38 of that big movement also. So when a break of a structure happens in higher time frames in the opposite direction of the current trend, we are not saying that, oh, the trend is broken, our trend line is broken, we are going to take buys until the trend is over. No, you are just going to aim for a retracement to higher time frame levels. You can see that we have a higher time frame order block here. So it is going to retrace to this order block and continue its move down. But after that, if it comes back and it breaks this structure or this structure, now we can think, so it broke this structure, so we are going to trade to the upside until it hits, for example, these POIs. It is going to retrace a little more, and after this, for example, this POI. But we are going to try to catch buying trades. We are not going to sell these POIs. We are going to try to catch buying trades until, for example, it comes and breaks this structure, pullbacks, break structure, pullbacks, and it comes to this point. Yes, we can risk a little bit of our balance here, but the best way to trade these movements is going to be looking for buys in order blocks or in setups I'm going to talk about or I talked about in this channel. So we are not going to try to catch selling setups, but we are not going to think that it is going to the moon either, or neither. I don't know the exact word. That is going to be the break of structure for reversals. Don't confuse yourself. I'm going to talk a lot about a lot of concepts in this channel. I'm going to talk about order blocks, POIs, imbalances, liquidities. They are not simple concepts. Maybe some gurus just have the simplistic views toward these concepts, but they are very advanced concepts and we are going to talk about them in details in this channel. So have the channel, watch all of the videos, watch the playlists, pay attention to playlists. You are going to get surprised, and try to first practice these concepts and then start to test them on a chart. Don't go just on charts and try to catch these trades. These trades needs your practice, needs your experience, and needs a lot of screen time. Thank you for your watching. Your help is much appreciated. Your support is much appreciated. I don't have a good internet connection. I'm using VPNs and I can't trade consistently because of that. I don't have access to good internet all the day. Thank you for your watching and goodbye.